Stephanie, part of being a fund manager is having your long-term macro thesis, whether it's one particular sector or one particular asset class. And another key to being successful is looking for out and underperformers in spaces that might not necessarily be in line with your thesis. So let's look at two themes today. We're going to talk about the industrial theme, which is your favorite one in the S&P 500.
Absolutely, it has been. But there have been pockets. Over the years, we've liked either aerospace or the auto cycle. This year, the big theme that I'm very bullish on is non-residential construction. Residential construction has been the leader, right? Growing at about 9%. It's expected to grow about 15 to maybe even 20% by the end of this year. I think those numbers are a little aggressive, but the point is that non-res typically follows residential construction, and we've had years and years of kind of underinvestment, if you will, by companies, and we're starting to see pockets of strength, and so I think that's the area that you really want to be focused on within the industrial space at this point.
You own Eaton and Johnson Controls and Action Alerts Plus, but you're also warming up to Emerson.
I am, because it's been an industry laggard. It has one of the very best CEOs, David Farr. I think he's done an amazing job over the years restructuring the company and doing M&A that has positioned it well for the end markets that are now starting to see some growth. So they're not out of the woods just yet. There certainly are some tailwinds and some headwinds, but I do think that the company is very well positioned for the HVAC recovery, for industrial automation to continue to improve, and process certainly will be on the mend.
Let's get stock specific and look into the social media sector. You like Facebook, the fund's done very well with it. In fact, you added on the 10% pullback from the highs.
Yeah.
And you also like the $2 billion acquisition of Oculus.
Yeah, so we sold it and a couple months ago because we made good money, we were taking profits. But when they announced the WhatsApp deal back in February, the stock it was hit, and we thought it was a great opportunity to get back in. What I like about what this company is doing is they're actually finding growth for the future. It may be 5 years out, it may be 10 years out, but they're not sitting on the cash that they have. And in fact, they're not even using a lot of the cash that they have. They're using their currency, their stock price, which has been very strong, and they're using that to help fund these deals. In fact, after the Oculus deal, they'll still have $7 billion in cash on their balance sheet. And so I think it still is a very healthy company. They can grow their existing business, and their existing business today continues to see momentum, particularly on the ad pricing side and mobile monetization.
What do you think more near term going into earnings?
Yeah, I think you're going to, well, they just raised the Instagram numbers in terms of user numbers, so I think that's good. I think you are seeing some momentum on the advertising and the pricing. And mobile monetization, that's going to be the key. That's going to be to see if they made even more progress on a sequential basis. I think they will. Their engagement numbers remain strong. Their user base is insane. It's like such a huge advantage and a barrier to entry. So I think the quarter should be good. And by the way, down 10% into the quarter, I prefer that rather than a stock that's rallied up 10% into a quarter. So I think the expectations are a little bit lower at this point.
Right, and of course, that's what we always talk about. Share buybacks and dividends, that does unlock some shareholder value, but investing organically and looking for the next 5-10 years out is really what's going to be key. And they have the innovation factor.
That's spot on. We only hope that Apple would do something like this, right? Or Microsoft, or some of these other bigger companies that have tons and tons of cash. So we'll see how this plays out, but on the weakness, we're definitely a buyer.
Okay, great. Thanks, Stephanie.